welcome to my YouTube channel in which I talk about personal finance and investing. Now today we are going to talk about a topic that is spooking investors worldwide right now. Market crash, bear market, inflation, recession, stagflation. Could it get any worse? Can we still invest during troubled times like this? Now the S&P 500 has recorded the longest bull run in history across the past decade from 2011 until 2020 until the COVID-19 pandemic hit and then the market crashed, but after that it recovered and went on to create an all-time high by the end of 2021. But now we are midway through 2022 and we are already crashing. So will the market crash further? Will there be a recession? First, let us look at the reasons behind this market crash. Now, first of all, it is being driven by excess liquidity in the economy, which drove up asset prices to unsustainable levels. Now, last year during February 2021, I have posted a video whereby I said that the asset bubble is bound to burst. We are bound to have a market crash because valuations are becoming unsustainable. The US Federal Reserve has pumped a lot of money into the US economy, and consumers, households are using this extra cash to buy assets like stocks, cryptocurrencies, driving them up to very high levels which are not being supported by fundamentals, and eventually the bubble has to burst. So during the 2008 global financial crisis, we have the housing bubble which burst, and now it is the turn for stocks and cryptocurrencies. So the market cycle moves up and down and it is just normal. We are now at the bear market stage of the market cycle. Then other than the demand side, we also have the supply side issue. So we're still dealing with the supply chain disruptions due to the global COVID-19 pandemic. We have not recovered from that yet, and now we have the Russia-Ukraine geopolitical crisis, which led to a disruption in the supply of commodities. Now, Russia is the world's third largest oil producer, and it is also the world's largest wheat producer. Together with Ukraine, Russia and Ukraine together contributed to about a quarter of the world's wheat supply. So because of this Russia-Ukraine war, we are now seeing a shortage in oil and also wheat and other commodities. So we have the case for inflation in a lot of economies, especially in US and Europe. Now US has seen an inflation level exceeding 8%, which has not been seen since 1981. So inflation is a big problem we are dealing with right now, and the US Federal Reserve has been taking steps to control inflation. So it has just started to increase interest rates again from the start of 2022. First in March and then in May, and then we are expecting subsequent interest rate hikes to happen all throughout the rest of 2022 until early 2023 as well. But perhaps are these interest rate hikes a bit late? And the problem here is that interest rate hikes may lead to recession if the interest rate increases are still not strong enough to tame inflation to the point that we need further interest rate hikes. Now this will affect consumer spending because when interest rates become higher, it becomes more expensive for consumers to borrow and spend money, and it will also become more expensive for businesses to borrow money to expand their business operations. So if this leads to a decline in economic growth, then we may have a recession. And a recession, the definition is 2 consecutive quarters of negative economic growth. So what we are really fearful right now is stagflation, which is inflation plus recession equals stagflation. Why is this scary? Well, we have seen this happen in 1970s when we have the oil price shock. So at that point of time, because oil prices have increased significantly causing inflation, then the US Federal Reserve Chairman at that point of time, Paul Volcker, had to increase interest rates to about 20% in order to tame inflation, which reached a height of about 14%. So that led to a recession. So when inflation and recession is happening at the same time, it can be a dilemma for governments. Why? Because in order to bring down inflation, you need interest rate hikes. But when you have interest rate hikes, it becomes more expensive for consumers and businesses to borrow money. So if they don't borrow money, they don't spend so much, then economic activity will reduce, and so you have recession. So it is very hard to control both inflation and unemployment at the same time. And we know that central banks always want to balance between inflation and low unemployment. So according to World Bank President David Malpass, he said that the war in Ukraine, lockdowns in China, supply chain disruptions, and the risk of stagflation are hammering growth. For many countries, recession will be hard to avoid. Then we also have Michael Burry, which is famous for shorting the American housing market during the 2007 subprime crisis. So he said that the US economy is bound to crash and consumers will blow through their personal savings soon. And when that happens, then you will have a recession. The mother of all crashes is coming. He has been saying this since 2021. And then we also have Robert Kiyosaki, author of Rich Dad Poor Dad, which has been warning about a market crash since 2021 through a series of tweets. He said that the biggest crash in world history is coming, but the good news is it is the best time to get rich. But the bad news is that it will be for a long time. So during times like this, when we are not sure whether the market will get worse, how do we protect our portfolios against inflation and recession? So in terms of inflation, I have recorded a video earlier on how to invest during inflation. So you would want to invest in assets that have tangible value and can appreciate over time. So for example, like commodities, or in terms of stocks, you want to invest in companies with pricing power so they're able to pass on the increase in production costs to consumers. If you want more details on it, you can check out my video. The link is in the description section below. Now, when there is a recession, typically the stocks that will outperform will be value stocks and defensive stocks. So value stocks are typically those stocks of blue chip companies that have strong, stable cash flows and have been operating for a long time with a solid business model. Defensive stocks are typically those in sectors such as utilities, healthcare, and consumer staples. So these tend to be less risky stocks compared to growth stocks like technology stocks, which will typically perform badly during a market crash or a recession. Alternatively, if you do not want to buy value stocks or defensive stocks, perhaps you do not like these stocks, or you think that the market may rebound soon, or you think that these stocks are already overvalued because a lot of investors have already bought into these, thinking that the economy will get worse, then you might want to consider dollar cost averaging into stocks that have been heavily beaten down. Like perhaps you may spot some value in technology companies that actually have solid business models and that have been already generating profits and also free cash flows. You also want companies that have high returns on equity and are not too highly leveraged. Other than that, you may also want to consider shorting stocks that still appear to be overvalued. Now, perhaps you think that some growth stocks may still fall even further if the economy gets worse, then you may want to short that stock. But be cautious because shorting can be very risky, because when the stock market suddenly rebounds, then there is no limit to how high stock prices can go, so your risk may be limitless. It may be very costly for you if the direction moves against you suddenly that you are not able to act in time. Other than that, you may also want to consider perhaps selling call options or buying put options if you think that the stock market will fall further from here, if a recession will occur. If you want to invest in stocks, you can check out Habit, which is the first crypto-friendly stock trading platform that allows you to buy US stocks as well as those listed on Hong Kong stock exchanges using the cryptocurrency USDT. So USDT is a stable coin in which its value is pegged to the US dollar. So normally people will use fiat currency like US dollars or Malaysian ringgit to buy USDT and then use USDT to purchase other cryptocurrencies on crypto trading platforms. Now, if you have USDT and you do not want to spend it all on cryptocurrencies because, say, now it's a bear market and then you want to diversify your portfolio, then you can transfer your USDT from crypto trading platforms to Habit and use it to buy stocks. So you can download the Habit app via Google Play Store or the Apple Store. Now, if you sign up using my referral code, you will get free stocks upon your first purchase of any stock on the app. So check out the link in the description section below and sign up now. So personally, I have been using the Habit platform for a while now, and I like that it has a simple interface. There is a trending tab whereby you can check out the trending stocks, and there's also the news tab whereby you can check out the latest news in the stock market. Now, what about your existing positions? Perhaps you may be sitting on a lot of losses right now, whether it be in your stocks or a crypto portfolio or even both. But it is alright because a lot of people are also dealing with the same thing. You are not alone. Even professional hedge fund managers are also recording significant losses. For example, if we look at Kathy Wood, the fund manager of ARK Invest, and she invested in a lot of growth stocks like technology stocks and also speculated on Bitcoin. Well, her fund is down by more than 60% compared to a year ago now. So even the professionals are dealing with the same thing you might be dealing with now. So what can you do with your portfolio moving forward? Well, perhaps if you have some money on hand, you can dollar cost average into the strong companies. So in this case, when the market recovers, perhaps you will be able to make gains instead of just having losses to look at for now. Because when the bad times are here, you can buy in a stock at a cheaper price. And when valuations readjust again, then you will be able to sell high again, because that is what we want to do, buy low and sell high to make money. However, this only works for companies that have strong and solid business models and those who are not over leveraged, and also those that are in sectors that are attractive and will continue to grow after the market recovers. So this does not apply to every company. Some companies will get beaten down during a market crash. They will lose a lot of money and they may not be able to sustain its operations. Well, we may not be able to time the market perfectly. It will either move upward or downward. No one have a crystal ball. But you can do your best to hedge your risk. So for those that you think that they will be able to survive the market crash and still emerge strong, you can employ the dollar cost averaging strategy. As the market moves in cycles, it will always recover. And when it does recover, you may stand to make greater gains than what you see you are losing right now. Because bull market gains typically exceed 100% on average, while the losses you see during bear markets may be between 30% to 40% on average over the long term. And also, bull markets tend to last longer than bear markets. And here are some charts for you to compare. If you look at this chart, the US market is up 76% of the time if you look at 1 year holding periods. But if you look at this other chart, which shows the holding period of 10 years, you see that the US market is up by more than 90% of the time. So if you have a long-term perspective, then all these short-term volatilities shouldn't scare you too much. Of course, we are all humans. We get affected by emotions. But if you have a long enough investment time frame, you will be comfortable knowing that this is just something temporary. Eventually, the market will recover. Your portfolio will recover. You just need to give it time, and also, importantly, diversify your portfolio. Diversify it, invest in a few different sectors. Don't just stick to one sector alone, alright? And remember the Warren Buffett saying that be fearful when others are greedy and be greedy when others are fearful. So it may be time for you to look at which stocks are trading at attractive discounts right now and are likely to recover strongly once the market recovers as a whole. So I hope that you have learned something from this video today, whether you have existing positions or you are looking to trade and see how you can benefit from inflation. I hope that you have some takeaways. Let me know what you think of this video, and let me know whether you think that there will be a recession or a market crash, and what are you going to do about it with your portfolio. So if you enjoyed this video, do remember to click the like button and also subscribe to my YouTube channel and let me know your thoughts. I will see you in my next video. Bye.